Right now on Upfront.
Targeting the Fed.
When you hear the president demand that interest rates be cut.
President Trump's continued demands to lower interest rates, his attack on the Federal Reserve. Now, just weeks from a new interest rate vote, our rare look inside the Federal Reserve Bank of Chicago.
That's going to get people's attention.
Did I say that? Maybe I said that.
Bank President Austin Goolsbee and voting member on the Interest Rate Committee with us in a new interview one-on-one. The pressures from the president, the government shutdown, and what the Fed will do. We'll get to it all.
Then shutdown stalemate.
The House is done. The ball is now in the Senate's court.
Intensifying pressure from members of Congress, airport delays, worker back pay, and military pay as members of the Texas National Guard arrive in Illinois. We'll get to it all with Republican Congressman Scott Fitzgerald.
And state Senate showdown.
As she flips this seat in the state Senate.
Democrats push to regain control of the state Senate with new legislative maps. The Senate's top Democrat, Dianne Hasselbein, is with us. Her attempt to flip seats and the decision on whether to endorse in the race for governor.
This is Upfront with Jaron Jordan and political director Matt Smith.
Hi, everyone. Thanks for joining us. Growing pressure on a number of fronts this weekend, from Congress and the government shutdown to National Guard troops arriving in Illinois. We'll get to it all.
But first, the impact on the economy. The Fed set to vote later this month on interest rates. The shutdown now with a growing impact on that. All setting the stage for our new interview with the Federal Reserve Bank of Chicago President Austin Goolsbee. In the heart of downtown Chicago, one of the heartbeats of the American economy, the Federal Reserve Bank of Chicago.
Matt.
Yes, good to see you.
Good to see you.
It's President Austin Goolsbee taking us inside the bank's museum.
And if you get a magnifying glass, there's tiny, tiny print down in there.
Goolsbee, a voting member on the Federal Open Market Committee, which sets the nation's interest rates, has seen renewed pressure from President Trump.
Well, I'd love him to lower interest rates. But other than that, what can I tell you?
Targeting not only the Fed, but Fed Chairman Jerome Powell. Goolsbee oversees the 7th District, which includes part of Wisconsin, Iowa, Illinois, Indiana, and Michigan. He was recently in Wisconsin meeting with business leaders and is now just some 2 weeks away from his next interest rate vote.
You visited with company leaders like SC Johnson, Molson Coors. I'm curious what you learned.
Well, we go to Wisconsin a fair amount. I've been to Milwaukee Business Journal. We had an event. I talked to a bunch of business leaders. It depends what's happening at that moment. I was very interested when we made this trip to Molson Coors and SC Johnson, trying to understand how are tariffs and how is the supply chain holding up when there are a lot of pressures coming at it. And then where are we in the business cycle? Does it feel like there might be layoffs? Does it feel like people are hiring? What's going to be happening with inflation and prices? So as you know, Wisconsin is much more manufacturing intensive than the wider economy is. That's true of the whole 7th District. That's kind of a part of our thing in the Midwest. Heavy manufacturing, also a lot of agriculture, and hearing the food economy, that also plays to our strengths. And seeing where those are in the business cycle was one of the main points of that trip.
We could see new tariffs implemented in the coming days. I mean, just with the uncertainty with tariffs, how does that play in your head when you go in to vote on interest rates?
Look, it plays in my head. I mean, it partly in the same way it's playing in the heads of the people that I go talk to. The CEOs say, I was thinking of doing X investment, but I don't want to do it yet because if the rates come back something totally different than what they're announced to be today, then this might have ended up being a mistake. So we're waiting, and we're just going to wait and see. Now, the thing about wait and see, the silver lining is maybe it means there's still some money sitting on the sidelines. And so if we get that clarity, it could come zooming back. But the notion of uncertainty and what impact it's going to have on inflation in the supply chain, that's really what's been on my mind. Before we got into this period that I've called kind of throwing dust in the air, making it hard to see if you're still on the road, before that, I thought employment was looking pretty stable.
Yeah.
inflation got way too high, but has been coming down and down. And so rates could probably go down a fair amount, for at least the ones that we're controlling at the Fed, over the next year. And I've slowed that. I still think that's basically true, but how fast that can happen, I've slowed down on the same uncertainty grounds that these business leaders have said.
I was going to say, I read a recent CNBC headline that said Chicago Fed President Goolsbee a little wary about cutting interest rates too quickly. That's going to get people's attention.
Right. Did I say that? Maybe I said that. But look, let's think of this as, where are we going to end up? I still think we're going to end up with rates down a fair amount from where they are now. The question of, does that mean we should front load and do all the cuts immediately while inflation is going the wrong way? Inflation is rising. We've been 4.5 years above 2%, which is what the Fed has said. We want to get it to 2%. We've been 4.5 years now above 2, and it's drifting up. So I'm just a little uneasy saying, hey, let's just start doing all the cuts now and let's count on the inflation's going to go away.
Some of the politicians would counter that.
They might, but our task by law at the Fed is to maximize employment and stabilize prices. That's our sacred dual mandate, we call it, and that's all we're supposed to be thinking about. We're definitely not supposed to be thinking about what do the politicians say. There's nothing in there that says make sure the stock market is happy. None of that is on there. It's maximize employment and stabilize prices, and people take it really seriously.
The next meeting at the end of the month, what should we expect? We
should expect a sober analysis by everybody sitting around the table. But I don't like tying my hands before we get to the meeting. I like hearing what the other folks have to say. I like getting all the data we can get. Side note, we can't get any data from the government because the government is shut down. So we're going to be flying blind a little bit, most likely.
If the government is still shut down at the end of the month, what does that do to those meetings?
Yeah, it amps up the intensity of the meeting, I would say. Now, what the direct impact of a government shutdown is on the economy depends very much on how long is it shut and how wide is it shut. But if you look historically, can be a hit on consumer confidence. Some of the biggest drops in consumer confidence in a short period of time came around government shutdowns, bigger than 9/11, bigger than some other major events.
When you go in and vote on interest rates, how divided is the committee right now?
It's interesting because if you look at the votes, it's not very divided at all. Oftentimes there'll be no dissents or one dissent, and that's representative, I think, of Chair Powell is a great diplomat and thinker and helping navigate that, coming up with statements and actions that a lot of folks can agree with. I think it's also reflective, if you look at the minutes or the transcript, there are some very different worldviews, and I like to say that the FOMC nowadays is the world's greatest deliberative body. And I say that not ironically, I think it is. I think we grapple with ideas and we come from some academic perspective, economic perspective, finance, markets, private sector. There are people with different backgrounds. And is that divided? I don't think that's not, I wouldn't use the word divided because that kind of connotes, there's a trench and we're shooting at each other. It's not like that. It's coming from multiple perspectives.
When you hear the President of the United States demand that interest rates be cut, go after the Fed, what goes through your mind?
Well, the first thing that goes through my mind is that person's not on the FOMC. If you go to the FOMC meeting, the law tells us what we're supposed to be listening to. It's not, anybody not in the committee can have an opinion, and I try to embrace and explore the arguments that they're making. But a world in which there can be political interference from a sitting administration with what the interest rate should be, That's a big mistake. That's the nature of central bank independence. Every rich country of the world has an independent central bank, where the independence means exactly that. The government can't go tell the central bank what to do with the interest rates, because if you just look at the places that do not have that, inflation is way higher. If you want inflation to come back, that's a way to get it to come back. That's a way to get the long duration interest rates, like 30-year mortgage rates and stuff like that. That's a way for them to go up.
Is the Fed strong enough to survive any political tailwinds or any political discussion or discourse or pressure of the moment?
Oh, I certainly hope so.
And a big decision coming from the Fed at the end of this month. Up next, the growing pressure targeting Congress, the government shutdown, federal workers and back pay, National Guard troops arriving in Illinois. We'll get to it all with Congressman Scott Fitzgerald up next.